Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. I want to talk about this article that's a couple days old. It says KKR clamps down on REIT withdrawals joining Blackstone and Starwood. So I mentioned a little bit about this in my previous video where I talked about the home buyers. About 68% of KB Homes contracts were being canceled. High levels, high rates of cancellation, which is increasing the inventory, the supply in homes, and what that could do to home prices. Check that video out. I just posted it yesterday. So I'm just going to go through this article and I'll leave the link in the description for you to read up on it as well. So it basically says KKR is pumping the brakes on withdrawals from its real estate investment trust, mirroring similar moves by Blackstone and Starwood Capital, amid a rise number of redemption requests from shareholders. The private equity firm's KKR Real Estate Select Trust disclosed in a regulatory filing Wednesday that investors holding more than 8% of the vehicle's roughly $1.6 billion in net assets sought to withdraw their money during the first quarter offering period, far exceeding a quarterly limit of 5%, Barron's first reported the filing. So basically, just like you saw with Blackstone, just like you saw with many of these private equity firms, they're coming out, investors are saying, I want to pull out, I want my money, there's, pain being felt, and then you get firms like KKR, Blackstone, and all these private equity firms saying, hey, sorry, we can't pull out because, hey, nobody's interested in buying. The demand has completely has been crushed. And again, check out the video that I posted yesterday, talk more about that. But the demand is not there. And if I go out and I start selling billions and billions of dollars of real estate, it's going to cause a trickle effect. And many of these stocks, these real estate stocks, these private equity firms, right? And some of these REITs, they seem like they're kind of mispriced a little bit. And you hear, I think it was BlackRock or Blackstone basically saying last year they did amazing. They were up in their funds, in their real estate funds, which is surprising because many of the REITs and the markets were down by a lot. Right? So how do you get these private funds and private equity funds saying that they've been doing well, especially private equity and in the private markets and in the banking world, they like to use a concept called LBOs. LBOs are leveraged buyouts. They're not buying this out. They're not buying companies and not buying assets and real estate out of cash. They don't just wake up one day and say, oh, I've got a lot of cash, let me throw it around. No, they're using leverage, they're using investors' money, they're using debt also to finance their investments. Now, if you've been watching all of last year, rates have been going up and up and up. It's very hard to miss. But when you see the rates going up at very high levels, and your deal is sourced through an LBO model or a debt version of it, and you got to buy these assets, and your interest payments are very high up there, and your returns are not, or matching, or a little bit below, it definitely poses a problem. And especially if you want to liquidate and sell, again, if you're a big player in the market and you just decide to sell, it's not very easy to do it in an illiquid market, and you would definitely cause a big effect in the markets, a spillover effect. So I think there's some issue when it comes to the pricing of these things and how they're being portrayed, and especially with, even if these corporations, right, these companies, these private equity firms, if they've got the money, they're not doing anything wrong or whatnot, right, and they're still very strong, that's fine. Right? I'm not judging, and I'm not saying that, hey, these corporations are doing fraudulent things and blah blah blah, right? Maybe a little bit here and there if they are, right? But I don't expect, and I don't see that these private equity firms are going to completely go to zero, especially these big names like KKR, Blackstone, and BlackRock, just because they're not, withdrawing their investors' money. Sure, there will be lawsuits and whatnot that will come out, and it is not right, but you've heard some of them come out and basically said, hey, we wrote this in the memorandum, we wrote this in our in our documents, saying that if you're investing with us, we can halt at any time, and if we have to halt, we will halt, right? Versus maybe, let's say, FTX didn't have that and was doing, probably fraudulent stuffs, a lot of fraudulent stuffs and shady stuffs with the money, right? But these private equity firms, especially when they're dealing with high net worth clients, tell them that, hey, your money's probably going to be locked in and we can't really do anything about it. And if it's, just what it is because of the times and the markets, then you're just going to have to wait. And sure, investors are not going to like that. And that's what's going to create the sentiment in the markets, the sentiment that, be wary, right? I can't get my money out. I don't know what's going to happen. So, do I want to be investing right now in the stock market if I can't get my money out? If I'm a high net worth client, can't get my money out of these private investments, do I want to be buying, into the stock market? No, the sentiment's going to be bad, right? You're going to look to maybe sell other assets if you really need the cash, right? We don't know what everybody's going through. I'm sure there's pain in every levels, from different levels of income levels, but definitely with higher rates, it's affecting everybody. And you're seeing it with KKR, you're seeing it with BlackRock, we're seeing it with Blackstone. So very interesting. Another heavy behemoth gorilla company. KKR is huge, and they're coming out basically halting withdrawals. These are the signs. I've been saying this since my previous videos, in the job cut videos and so on, right? These are the signs. We're starting to see it. Rates taking effect, 6 to 12 months for it to really creep in and see the effects. And we will see more of these effects throughout 2023. So let me know what you guys think. Subscribe, hit the like button, bell icon to be notified on the next video. Comment below, let me know what you think, and I'll see you guys around. Cheers, bye.